This is Nightly Business Report with Tyler Matheson and Susie Gehring.
Sell strategy. Stocks meander in a market searching for clues. But maybe Mr. Market is giving you a chance to rethink what you own. Tips tonight on how, when, and why to sell stocks or funds in your portfolio.
Bumper crop. Global food prices are falling and the government predicts record harvest. But have those lower prices made their way to your corner grocery store?
Third time's a charm? The FDA approves its third diet drug since 2012. So why did shares of the drug maker sink? All that and more tonight on Nightly Business Report for Thursday, September 11th.
Good evening, everyone. Caution was the watchword of the day on Wall Street today. Investors focused their attention on President Obama's plan to combat Islamic terrorists in the Middle East, some tougher new sanctions against Russia, and the timing of the Federal Reserve's next move on interest rates ahead of next week's policy meeting. The major stock averages began the day lower but closed at the highs of the session, getting a boost from rising oil prices. By the closing bell, the Dow lost 19 points, the Nasdaq was up by 5, and the S&P added 1 point. Well, despite investor caution and uncertainty, there's been one consistent trend in recent weeks. Every time the major averages pull back from their recent highs, many investors have stepped back in to buy. Dominic Chu looks at the recent market activity, what may happen next, and what some professionals are buying right now.
Stocks go up and stocks go down. But with the overall market still near record highs, many investors are wondering if now is the time to sell and take some of those profits off the table. Certain stocks are getting hit worse than others. So far in September, the broader S&P 500 has lost about 0.5%. But energy stocks have taken a bigger hit. As a sector, it's lost around 4% during the same time. One big reason is the price of oil. It's been on a steady drop since June, and that's helped drag down oil-related stocks. But not everyone is as worried about oil.
Main Street should not be looking at the price of crude oil and determining what their energy investment should be. They should be picking solid energy companies with a focus on the growth in U.S. Oil production, which is at 45-year highs. Who are the winners? Who's got the proven assets? Invest in those businesses.
Among Terra Nova's top picks are oil and gas exploration and production companies like EOG Resources, Pioneer Natural Resources, and Marathon Oil. So far in 2014, there have been 3 notable pullbacks in the stock market, but none have been more than 6%, and each bounce has led to fresh highs. Some experts believe that the trend could continue.
Consumer sentiment is as high as it's been since before the recession. Auto sales have spiked, manufacturing is picking up. And we're seeing that information out there, yet the market's kind of plodding along right now. So I think a lot of the optimism has been priced in. Nonetheless, the economic backdrop looks good. So I think we're going to see stocks continue to move higher, but I wouldn't expect anything dramatic.
Of course, geopolitical and economic risks still abound, and some market pessimists still maintain that we're long overdue for a significant stock market correction. For Nightly Business Report, I'm Dominic Chu.
So far, September's been a bit of a languid month for stocks. They ease down a bit, and as Dom said, then they wander a little bit higher. Nothing in their behavior this month has screamed buy or sell. Even money manager Mike Holland sounded tentative when he told us yesterday what he's been doing with his portfolio.
I've still got a very full equity portfolio, but I'm taking some chips off the table. And when in 2008, when things were very ugly, as Warren Buffett said, that's when you buy some things. So right now I'm actually paring back. I'm not selling willy-nilly, but in fact I've taken a few things off the table just in the last several days.
So how does an individual investor know when it's time to do what Mike Holland is doing? Judiciously selling shares. For some signposts, we turn to Mitch Goldberg, president of his own investment firm, Client First Strategy. Mitch, welcome. Good to have you with us.
Thank you for having me.
You know, we in financial news on television, we are very partial to telling people exactly what to buy. Tell me what to buy, and I get it. We're probably less good at telling people what and when to sell. What's your best advice for them?
My best advice is investors need more discipline, because you're right. People are always focusing on what to buy. Research is buy-driven. But as investors, we need to take some chips off the table. As they say, don't count your chickens until the eggs hatch. So, don't count your profits until you take something off the table. My feeling is that with a disciplined strategy, I like to use strategies like stop orders, trailing stop orders. But basically, I want it pre-programmed so that when my stocks go up a certain amount, let's say you have 1,000 shares of a stock, it's up 25%. I want to take 25% of my shares off the table and reinvest the proceeds.
So you take the emotion out of it, basically.
As much as possible.
And, you know, you have some tips. I mean, we have them up on our screen, so let's go over some of them. You say hesitation is the costliest enemy from investors. Is that to the emotion thing that Tyler was just talking about, or something else?
No, it goes directly to the heart of what Tyler was talking about. When you have hesitation, you know, it's a symptom of a lack of a disciplined strategy. So what we want to do is we want to bring in the discipline to avoid having to, let's say, be in a stock that's up, you ride it up, you ride it down, you ride it up, and then at the end of the day, you really haven't made anything on your equity position.
Are you saying the day that I buy the stock, I pay $20 for a stock, and that day I should say, and when it hits 40 or 50 or whatever it is, I'm going to sell it? Is that the discipline?
It's somewhat similar. There is a little bit of feel to this also because it depends on industry, volatility, different stocks, different news coming out. But typically, if I'm up 25% in a stock or so, that's where I'm going to look to put a stop order just below that level.
So you say don't sell all at once. That's the other point here. In other words, if the stock has gone up 25%, you might not dump 100% of it. You might dump 25 or 50%. Similarly, if let's say I bought a stock for argument's sake, or an ETF at $100 a share, I ought to have in my head the point at which I am going to start aggressively selling on the downside, right?
Yes.
Is it only price-driven here, or do I want to watch developments in the news if I hear that an earnings number isn't good or that there's some sea change in an industry? Or those kinds of day-to-day news factlets probably going to mislead you as much as they're going to help you?
I would say they're going to mislead you as much, if not more, because then what's happening is you're becoming so hyper-focused on the day-to-day news. You start buying, you start selling, but you're not really making any progress. You know, there is something called buying and giving investment some time and being patient. So if you're going to, let's say, buy a stock, for example, I'm not necessarily going to buy it all at once. I might put even, dare I say, a market order for 25% of a new position and put a buy limited order in for the same stock. You know, if it goes down 3%, I'll double up. If it goes down 6%, I'll buy a little bit more.
What's a buy limit order?
Right.
It's an open order that basically says that you're willing to pay a specific price at a certain price or lower.
Mitch, I was really interested on this last tip that you have for our viewers. You're saying raising cash is not a long-term strategy. How do you know how much cash you should have in your portfolio?
It's a good question. I think generally it speaks to people's risk tolerance, their time horizon, their financial goals. But if somebody is, let's say, 70 plus, retired, I'm actually looking to be maybe 40 to 50%
that much
cash and fixed income. I am. Things can change a little bit, but right off the bat, at this level of the market, that's where I'm comfortable for my clients. Again, everyone's situation is different. Somebody in their 40s or 50s, we're probably talking 10 to 15% cash.
So I think we began very quickly. We began by saying you're taking a few chips off the table. Where? What kinds of stocks? And what are the characteristics of the ones you're selling?
Well, the characteristics of the ones that I am mostly selling are actually my winners. And they are across the gamut, from industrials to consumer discretion, consumer staples, healthcare, energy.
Well, I'm glad to hear you have winners across the gamut. That's a good thing.
Well, you know,
in your business.
The idea is to thank you very much. Yes, we have our share of bruises also. Okay.
All right. So you're selling the winners, not the losers.
Right, but it's a gradual process of coming out of old positions gradually on the way up. And taking on new positions on the way down. So it's always a seesaw between cash and equity.
Well,
Mitch, thank you very much. Mitch Goldberg of Client First Strategy.
Thank you for having me.
And looking to Washington, some good news to tell you about today. The federal government reported a budget deficit of $129 billion in August. That is much lower than it was a year ago. With 1 month to go in the current fiscal year, the U.S. is on track for the lowest annual budget shortfall since 2008.
And today came news also from Washington that more Americans sought unemployment benefits last week. First-time claims spiked by 11,000. That is the most since late June, but it is still lower than it was a year ago.
An update on a story we reported earlier this week. We told you about some economic indicators you might not be aware of, but they're closely watched by the Federal Reserve. Well, today, we know what those reports say. And now, just days away from the Fed's next policy meeting on interest rates and its monetary easing policies, Steve Liesman takes a look at exactly what those central bankers are looking at in that data.
A new labor market indicator from the Kansas City Fed shows strength in the nation's job market, but a long way to go until it can be considered healthy. And yet it could mean somewhat faster Fed rate hikes than Wall Street now anticipates. The Labor Market Conditions Index, which Fed Chair Janet Yellen said she is now following, brings together 24 separate indicators into a single place. It rose 0.08 in August to minus 0.52. That's a new post-recession high, but it's still below the worst levels of the 2001 recession and still below average. But the momentum indicator suggests good job growth in the months ahead.
If the pace of improvement continues at the rate that it's been since, say, QE3 started, I would estimate we would hit the zero marker or the average level of conditions next March. And historically, the Fed has started to move rates higher at roughly around that time.
Meanwhile, it looks like second quarter growth, already reported to be strong, is even better than first thought. A relatively new government survey that measures the big U.S. service sector shows healthcare spending was much healthier than first estimated. In fact, it surged along with better business investment. The result, growth in the overall economy in the second quarter now looks to be running somewhere around 4.7%, a half point better than originally reported, and maybe the best growth quarter since 2005. It's certainly a big snapback from the weather-related negative number in the first quarter. It's unclear if the strength will motivate Wall Street to upgrade their view on the third quarter, which is running a pretty healthy 3.1%. One more piece of data this week. Watch for an important read on consumer spending at 8:30 a.m. with the August retail sales report. For Nightly Business Report, I'm Steve Liesman.
At least one new forecast has the Federal Reserve raising its benchmark interest rates starting in March. Today, economists at UCLA's Anderson School of Management predicted that the federal funds rate, which has been at or near zero since late 2008, will be raised in 6 months and will continue to gradually increase through at least the end of 2016, when UCLA thinks it will stand at 3%.
Fed policymakers will also be analyzing the gyrations in oil prices. Just today, the International Energy Agency lowered its forecast for oil demand. This is the third month in a row that the group did so, calling the drop in worldwide oil demand, quote, nothing short of remarkable. The main drivers, economic weakness in Europe and China. But worries about conflicts in the Middle East caused oil prices to spike higher, at least for today. The price of domestic West Texas Intermediate shot up by more than $1, closing just below $93 a barrel. Brent crude prices bounced off a 2-year low, ending 5 straight losing sessions.
Tougher new sanctions against Russia were announced today by the White House and the European Union. The new actions up the pressure on Moscow for its role in aiding separatists in Ukraine. The sanctions will take effect tomorrow when more specific details will be announced, but they are expected to target Russia's energy, defense, and financial industries.
In 1 week, residents of Scotland will vote on whether to become an independent nation, ending a 300-year union with the United Kingdom. And today, with opinion polls showing Scots evenly split on separating, Lloyds Bank and the Royal Bank of Scotland, both based in Scotland and both partly owned by the British government, said they would move their main offices to London if voters decided to break away from the UK. The reasons include currency issues, debt repayments the banks have to make, and their regulatory relationships with the Central Bank of England.
Still ahead, more trouble at Radio Shack. We warned you about the possibility of a bankruptcy last night. Today, we have more information.
more trouble at Radio Shack. The retailer posted its 10th straight money-losing quarter, losses that were twice as big as Wall Street expected. As we reported last night, the struggling electronics chain now confirms it's in talks to shore up its finances, but warned that it could run out of cash and declare bankruptcy if no deals are reached to restructure its debt. Shares close higher today, up by 9 cents, as executives try to raise money and turn things around.
Well, a different problem at Verizon Wireless. The telecom giant's CEO said the company is seeing a surge in wireless customers in the current quarter, up a staggering 40% from just the year-ago period, but because of cheaper plans at rival carriers and the heavy cost to subsidize all those must-have smartphones that customers want, margins are getting squeezed.
A new diet pill got the okay from the Food and Drug Administration. It's called Contrave. Now, you would think shares of its maker, Orexigen, would get a big lift on that news, but shares actually declined by 10.5% today. So what's making investors hold back on what looks like a solid investment? Meg Terrell reports.
It was supposed to be good news. Orexigen Therapeutics got word after a long battle that its obesity drug was approved by the FDA. But today, its stock sank. It seems counterintuitive. Obesity is a potentially huge market, including more than a third of U.S. adults. But the drug Contrave is the third new diet pill to be cleared in the last 2 years, and investors may be wary after recent experiences.
There had been no real new obesity drugs for many years, and all of a sudden we had 3 new drugs all coming along altogether, so there was a lot of investor and physician excitement in the space. What we've seen commercially since 2 of these drugs have been launched is somewhat disappointing. The adoption really hasn't been there.
Orexigen may be suffering from investors' disappointment with the previous drugs, Qsymia from drug maker Vivus and Belviq from Arena. They were both approved in 2012, and initial sales have missed expectations. There are still safety concerns about obesity drugs after several, including Fen-Phen, were pulled from shelves over side effects. Another issue is cost. It's been an uphill battle getting insurers to reimburse for the drugs, though the companies say that's changing. And finally, analysts say having enough resources to mount a successful drug launch has been difficult for these smaller companies. Orexigen is partnered with Japanese drug maker Takeda to sell Contrave in the U.S. CEO Mike Naraki said he's confident Takeda's army of 900 sales reps give the drug a chance of being a blockbuster. And though analysts from J.P. Morgan and Wells Fargo recommend buying Orexigen stock, investors clearly are still skeptical. For an LE Business Report, I'm Meg Terrell.
It looks like Lululemon is getting back into shape, and that is where we begin tonight's market focus. The yoga apparel maker's earnings beat Wall Street estimates on the top and bottom lines. It also raised its outlook for the year. The company said higher than expected online sales helped to lift its results. The stock surged about 14% to $43.73. Kroger also out with strong results. The grocery chain's quarterly's better than expected, and it hiked its profit and sales outlook for the year. The company attributed growing consumer confidence for the good performance. Shares were up, but only a fraction, 52.17. Investors bought up shares of Taminco after Eastman Chemical Company announced it would buy the specialty chemical maker in a deal valued at almost $3 billion. Eastman says the acquisition will strengthen its presence in the food, feed, and agriculture markets. Taminco popped almost 10%. 26.21 was its close. Shares of Eastman, they were off a percent to 82.34. Alcoa has signed a long-term contract to supply Boeing with aluminum sheet and plate that's worth more than $1 billion. This new contract is the largest ever signed between the two companies. Despite that, shares of Alcoa were down today nearly 2% to $16.90. Boeing also off a bit at $127.64.
Here's another partnership that was announced today. GoGo, known for its Wi-Fi service on planes, is partnering up with T-Mobile to provide free in-flight texting and other services beginning on September 17th. Shares of GoGo rose about 9.5% on that news to $18.58. T-Mobile fell slightly to $30.45. Pandora scored a licensing partnership with BMG. That's the world's 4th largest music publisher. BMG's roster includes songwriters who have written hits for a wide range of performers, everyone from Frank Sinatra to Beyoncé. Pandora shares jumped 3% to $26.94. Ulta Salon popped after hours right after the company reported better than expected second quarter earnings and revenue. The cosmetics retailer also gave an upbeat outlook for the full year. The stock was higher right after the bell. In the regular session, shares were up a fraction to $97.48. And Hertz has reached a deal with activist investor Carl Icahn. It's agreed to add 3 of his representatives to the Hertz board. In return, Icahn agreed not to launch a proxy contest at the car rental company. These new board members will also be involved in the search for a new CEO. The company announced its chief stepped down on Monday. Shares soared initially after hours. During the regular trading day, the stock was up slightly at $27.75.
And an auto recall you should know about. Toyota will recall 140,000 Tundra pickups because of an issue with the installation of airbags, and that could prevent the airbag from deploying properly. Thankfully, no crashes or injuries have been reported in connection with that default.
Food prices are heading lower. The United Nations Global Food Index shows that worldwide, food prices hit a 4-year low last month, with the largest price declines in dairy and grains. That's thanks to strong supplies and weak demand for imports in many countries.
Prices on some major grains may be heading lower right here at home, and that's because just today, the government reported a bumper crop of corn, soybeans, and wheat. With so much product coming out of U.S. farms, prices on those major crops all drifted lower in trading today. So, will record-setting crop yields translate into lower prices for you at the grocery store? Jane Wells reports.
Everyone knew it was going to be a record crop this year after a summer of near-perfect weather in the Midwest. But the government now predicts even more corn and soybeans than expected. A lot more.
Boy, oh boy, when you kind of take this report over to the side of the road and look under the hood, those the bean pod counts and the ear counts on corn and beans really kind of make you think what the old traders say down here. Big crops get bigger.
Farmers are now expected to produce almost 14.5 billion bushels of corn, a record, and nearly 4 billion bushels of soybeans, another record. Corn, which peaked at $8 a bushel 2 years ago, is now under $3.50. Soybeans are now under $9.80, and trader Scott Shellady thinks they could fall into the 7s. Even wheat fell as the government reported global supplies rising faster than demand. Even so, these lower prices haven't really made their way to the grocery store yet to consumers, which is kind of funny because these commodities have been falling for most of the year. And Scott Shellady says that's something to watch. They're actually what he calls the canary in the coal mine, that if this downward trend continues for the next few months.
But this is going to play into the bigger picture, and mark my words, we're not going to be talking about inflation. We're going to be talking about deflation and what we can do to stimulate the economy.
Most of the corn and soybean grown in this country goes into feeding livestock, so at some point meat prices should fall. They haven't really done that yet. The government said beef production is down and more beef will be imported because high steak prices haven't scared off consumers. But there's plenty of poultry, and even turkey production is a little higher than before. Good news if it means that Thanksgiving drumstick won't cost an arm and a leg. For Nightly Business Report, Jane Wells, Los Angeles.
Still ahead, Wall Street remembers and gives back as it honors those who were lost 13 years ago today when tragedy struck. That's coming up.
It was a day of remembrance as the nation marked the 13th anniversary of the September 11th attacks. President and Mrs. Obama observed a moment of silence outside the White House before attending a 9/11 memorial service at the Pentagon. At the site of the World Trade Center in New York City, family and friends read the names of the nearly 3,000 people who died there. And on Wall Street, a moment of silence on the floor of the New York Stock Exchange to honor those who were lost.
Cantor Fitzgerald lost 3/4 of its New York employees when those Twin Towers fell. Today, the trading firm remembers that day and the people it lost with a singular act of charity. Mary Thompson has more.
No firm lost more on 9/11. Now Cantor Fitzgerald commemorates that loss by giving back.
It helps us turn the toughest day into something that's really beautiful.
CEO Howard Lutnick lost 658 employees on the day the towers fell, including his brother and his best friend. So 13 years on, he and the employees of the firm he rebuilt donate the day's trading profits and their salaries for a day to hundreds of charities, with a little help from an A-list group of stars like actor Ben Stiller.
Yeah, and they all are saying 8. They're all giving me a thumbs up, go higher, go higher. I wanted 114.5, but I said no.
Cantor's clients get to talk to the stars, while sports stars like New York Rangers goalie Henrik Lundqvist get to raise money for their charities.
But now I'm also starting my own foundation, Henrik Lundqvist Foundation, and focuses health and education for children pretty much all over the world.
Supermodel Christy Turlington, raising money for Every Mother Counts, also sees it as a way to honor the city she calls home.
It's wonderful to find a way to participate on this day. I think we all want to do something, and we don't always have the ability to do that.
Over the years, Cantor's Charity Day has raised over $100 million.
And while bringing in rock stars like John Bon Jovi for a day can be a thrill, Lutnick takes greater pride in another legacy he's building.
We've got 41 children of guys who got killed 13 years ago. Imagine their kids working at Cantor Fitzgerald. I mean, that's extraordinary.
One of those employees is Lauren Gracioso, who lost her dad on 9/11.
We kind of went through the whole situation together, and it made us very fond of the firm, and especially Howard. So it was a great opportunity, and I'm very honored to work here.
Words that would make any father proud. For Nightly Business Report, I'm Mary Thompson in New York City.
So much good coming out of so much bad.
Yes.
And a lot of these kids who lost their parents, they were maybe teenagers, and now they're grown adults and working at the firm.
And Howard Lutnick did an amazing job rebuilding that company. More than 600 of his colleagues and friends had taken on that day.
Well, that is Nightly Business Report for tonight. I'm Susie Garib. Thanks for joining us.
And I'm Tyler Mathisen. Thanks from me as well. Have a great evening, everybody, and we'll see you back here tomorrow night.
I'm Susie Garib with a Nightly Business Report news brief. Investors were cautious today, focusing on President Obama's plan to combat Islamic terrorists in the Middle East, some tougher new sanctions announced against Russia, and the timing of the Federal Reserve's next move on interest rates ahead of next week's policy meeting. The major stock averages began the day lower but closed at the highs of the session, getting a boost from rising oil prices. By the closing bell, the Dow lost 19 points, the Nasdaq was up by 5, and the S&P added 1 point. The government reported a budget deficit of $129 billion in August, much lower than it was a year ago. And Radio Shack posted its 10th straight money-losing quarter and warned that it might have to file for bankruptcy. Be sure to tune into Nightly Business Report right here on your public television station.